One of the big questions people have before they join Insider is, how do you achieve asymmetric returns? What sort of things are you investing in that allow you to target 5x profits or more? It's a good question. Well, an asymmetric setup means whatever we're investing in has to be low risk as well as having huge upside. Now that disqualifies a lot of things up front. We avoid anything that carries high risk. So think early stage companies, things like pot stocks or crypto projects or growth stocks, things like that. And then we also avoid anything that also doesn't promise huge returns. So stocks making up the S&P, for example, because the likelihood of those stocks achieving a 5x return in the next few years is relatively low. So we're not interested in risking $1 to make $1.10. We like risking $1 to make $10, for example, but only after we've done our due diligence and we're fairly certain of our thesis. So what do we actually invest in? Well, for the most part, we simply buy good quality publicly traded equities, but we buy a basket of them in sectors that are on the cusp of a bull market. And the reason we do this is because it's much easier to predict what an entire sector is going to do than any one single stock. You see, a company can suffer from so many random events that completely change its share price that you cannot account for as an investor. We call this corporate risk, but this doesn't happen to entire sectors, which are a lot more predictable, and thus you increase your chances of profit. It's the safest and most efficient way to build long-term wealth. You see, despite what everyone's led to believe, fortunes are not made by short-term trading or investing in unicorn startups. Sure, there are rare examples of people doing this, but that's just being lucky. And luck is simply not a viable investment strategy. Instead, fortunes are consistently made by true investing, understanding the world's realities in a way that others can't or won't, finding a low-risk way to buy something for $1 and sell it for $10, $20, or $100 a few years later when the rest of the world catches up. In other words, buying or selling before the herd. This is just old school investing, but it's something that is just not widely practiced in our modern world, where we've been conditioned almost to be impatient and are constantly in search of immediate gratification. So we have dozens of these low risk, high return trades that are not correlated to what the wider market's doing. And this is across all sorts of sectors in different asset classes and in different jurisdictions. Behind each of our investment recommendations is the research we've put together in a no-nonsense, easy to read but professional way, and it lays out what we're doing with our own money, why we're investing, and how we're investing, so you can replicate it exactly or use it to do your own thing. We also provide alternate ways to execute depending on your level of sophistication, and we've designed Insider to be useful whether you're a complete rookie or a seasoned trader. And so we're simply investing a little bit of our money spread across all of these ideas, changing our positions only when a thesis or theme or sector changes. And here's what's good about this. It allows you to diversify risk, but concentrate high upside across all your investments. It allows you to bend the laws of probability to be on your side. Because if you're constantly risking $1 to make $10, you can be wrong 9 out of 10 times and still break even. This is why we are guided by asymmetry. It's not just gold, it's not just Bitcoin, it's not just tech stocks. This allows you to get on with your life without being wedded to your screens the whole time, managing your positions frequently, tearing your hair out with stress when the market goes into the red. This allows you to diversify and get on with things that are frankly more important than money. Knowing that you've got some of the sharpest investors in the world, focusing each and every day on the portfolio, investing alongside you.